Share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Evidently, you folks are listening to me. We have over 2,000 new subscribers this week. I'm very grateful to have you on board. Looking forward to you being part of this community. In tonight's video, I told you last night I was probably going to cover cryptos and focus on that. It's going to be more of the normal Kendall Report that I used to do. We're going to go through a macro view of the markets tonight, talk about a number of things that are going on. Too climatic tomorrow, that's what's going on here, that we want to make sure we cover all the markets. We're at all-time new highs again, lots to talk about. Also, I am going to cover Bitcoin, so we'll go into that and some of the things that I think is happening from the crypto explosion that we're seeing. So let's get into tonight's video. Exciting stuff here, folks. Last night was a little clickbait kind of deal with the crash of the AI stocks, and as you know, when I got into going through the analysis of all the AI stocks, there wasn't really a lot of crashes to be found. There's still a lot of big uptrends. Once again, I'm looking at the heat map today. NVIDIA up 4.7. ASML up 4.2, TSM, you know the story. I talked about it all this week. It's all about the semiconductors, the chips are driving everything. And also we had Meta and everybody was on board today, right? All the big guys. So blast off. In last night's Substack, I was talking about a 5123 number basis, the S&P. If we stayed below that, there was a chance to maybe set the tone for maybe a sell-off on Friday. Obviously, that didn't happen. We took out 23 even before the open this morning, and then we just saw the market just explode all the way to 5170, all-time new high on the S&P. Everything across the board, right, with the exception of the Russell, of course. So, like I said, we're going to go through a pretty typical view. I'll talk a little bit, basically everything. I'll go into more depth on the Substack newsletter. And if you haven't got that, it's kendallreport.com/newsletter. That'll get you to a place to sign up. 7-day trial. It's $8 a month. It's not a lot. And there's a free section every night as well. So you can get my opinion at least on everything every night. And also, just to get all the advertisements, we are self-sustaining here on this channel. So you can go to kendallreport.com/indicators, find out about indicators. We do have a special on there. So go there to find out about that stuff. But let's talk a bit about what's going on. I think from a sentiment standpoint, what we're seeing, I saw a report earlier that they're talking about shortage in electricity, which is really interesting, right? This whole push, and we kind of went on after Tesla earlier in the week and the EVs. Well, they're short electricity. Why? Because they're building warehouses and stuffing NVIDIA chips in a lot of servers, right? So the AI explosion is real, and it's really getting quite interesting from everything we're seeing. I mean, there's this, like, I think I saw someone saying that I think another week of what we're seeing that NVIDIA will have a higher capitalization than Apple. So it's really a lot of folks, and I talked about this last night. If you watched last night's video, I went through NVIDIA. This thing is in a parabolic curve, and there's no stopping it at the moment. So a couple of things to just go through. What I saw today in the markets was really just that big bid. We had Powell, my bad, because I forgot that he was testifying, I guess probably tomorrow in front of the House. I'm not sure. I didn't have a chance. I had a crazy day before I showed up here today. But Powell was talking again, very dovish. The same thing I mentioned in the Substack, and yesterday he keeps talking about, well, looks like we're going to be able to lower rates as we get closer to the end of the year. I'm still convinced that's probably June. I think the markets agree with me. I think the Fed funds indicator right now is about 70%. Something will happen in June. I just happened to see that. And I don't think that they're wrong this time. I usually am pushing up against some of the Fed fund futures and the projections from that stuff. But it looks to me that's the right thing. I'll go into more detail because, like I said, we're going to do a normal Kendall Report tonight. So I'm just going to go through all the stuff, including I'll bring up the database because we're getting some traction. I don't have tonight's database yet. The good and bad of things is I hate this time of year. We live in Arizona, so we don't change our clocks. Everybody, we're going to fall back this weekend, so I'm going to move without moving physically. I'm going to end up in Los Angeles, so everything's going to happen an hour earlier. Market's going to open at 6:30 instead of 7:30. It really throws the rhythm off for a while. So anyway, we got to deal with it. That's the way it goes. But what we're seeing here, I think, a couple of things to try to tie together what I'm seeing outside of the Powell comments and the dovish and expectations of the what the Fed might do in the future. I actually think this whole explosion that we've been seeing in in crypto and Bitcoin. I mean, Bitcoin made an all-time new high. The old high was 69,000. We printed above that. I mentioned 71,000. I'll go through some deep analysis tonight. I'll show you the quarterly. We got targets well over 100,000 to talk about. So crazy stuff, and it's really catching hold, and it's starting to spread throughout the entire spectrum of things. And like I said, I don't feel I'm really qualified to talk deep about cryptos and some of the things. I'm going to educate myself over the next several days, and I do follow Bitcoin very closely and trying to get a touch for a feel for what's going on. And I'm looking at my phone here on purpose, not being rude. Is one of the things that I mentioned in the Substack last night, the Bitcoin ETFs are blowing it out of the water for volume. These brokers that are handling this stuff, iBit is just doing crazy numbers in volume. So it's pretty obvious that a lot of folks have found an easy way to get into Bitcoin. It's made it a path. So the reason why I'm bringing that up right now is I think that is affecting market sentiment across the board. It's actually putting everybody into this like really bullish frenzy craziness, like where's something to buy? Everybody's just grabbing. The stampede was pretty obvious again today. I've talked about that quite a bit as we go through everything. I'm just amazed at what's going on, folks. I've been around for a long time, 44 years, I just mentioned on the opening, and I can tell you nobody, not me, not you, before this moment in time in history, nobody has seen anything like what we're seeing. And I think it's bringing in so many more entries and people coming into the markets. It's absolutely getting to be insane from the standpoint of the market excitement, bullish sentiment, just everybody wanting to be involved. I posted there's a podcast that I posted not that long ago from a conversation I had back in 2019. We were talking about digital, doing fractional shares, and that the volume was going to increase. Well, this is just a whole nother level. So my expectation is that we're going to see explosions in interest in the markets, new entries, and the characteristics, I've also talked about this as well, is the characteristics of how the markets are trading are way more explosive than we've ever seen before. Not to mention the S&P is at 5,100, so now all of a sudden 1% is like 50 handles. So you've got lots of volatility movement. We're starting to get all of the of that back into the markets, and getting the VIG. It's an old gambling term, right? But you start to get all this juice in the market. It's just really powerful. So this is a special point in time. As far as we come into Friday, I have a couple of comments. We got employment numbers coming out. We saw it today where we had, the unemployment numbers or the claims and the continuing claims. What was interesting about that, continuing claims actually bumped up over 9 mil again. It had dropped down for a week, but it's right back up there, and the claims are about 217, and we're still seeing, with JOLTS coming out and all the things that we've seen this week, we're still seeing a pretty robust market. And I'll talk about this when we get into the interest rate just shortly here, but I believe that it's going to become very critical that the Fed actually moves some things. I have been the most anti-inverted yield curve causing a recession person that you've known for the last almost better part of 2 years, year and a half plus. And I am going to be very concerned if they don't move the meter around, they don't get the Fed funds rate down under 5%. I think we're still running effective Fed funds every day around 5.33. So we're going to have to start to adjust some of these numbers. And I think Powell's telling us not only that, QT, a whole bunch of stuff is going to change. And that may be bullish to a point, but it goes along the lines of, if you watch my long-term forecast I did the other day and talking about the possibilities on a quarterly chart. Those of you reading the Substack, I've been talking about how our database right now is projecting a rally all the way into July and potential extension into October of this year. So this market's not going to go away. We have the State of the Union address here shortly tonight. I can't imagine that's going to be exciting, but who knows what comes out of that, what kind of rhetoric comes from that. So we'll have that noise, we'll say, also in the markets in the morning. So just know that there's going to be a lot of dynamics coming into Friday. It's the end of the week. There's a whole lot of stuff. It's really the end of the first full week of March. So we're setting the tone for this month. And I guess in final statement, is what I've been looking at is the potential for the markets at least hitting some kind of peak level as we come into this first week. It looked like we might get some weakness 2 days ago. Well, all that went away in a heartbeat this morning, when actually even before the open, we were already seeing the market rallying substantially up through that, like I mentioned, at 51.23. So let's do this. I'm going to bring up the database. We're going to pretty much go through like old school days on the Kendall Report for today. This will be the final video for the week. The other thing I will let you know is my plans are, if I'm not doing market-related content, I may change the schedule of the daily videos to Monday through Friday, and then I don't have to do one on Sunday if I'm not doing market-related. And so that's possibly what things are going to go. I know not everybody's on Twitter. Maybe we can put a post on the YouTube channel as well, and I'll definitely post what my intentions are. Probably sometime tomorrow I'll put some things out on X. I keep calling it Twitter. Anyway, let's get in and take a look at the database and see what that looks like. Okay, folks. So let's start here. We've got this is the daily. We're at 57%. This is yesterday's run, by the way. So we don't. It's too early in the day to get today's run. But we did see some interesting things come out, because we did see we got decent rotation. We had over 1,000 buys for this morning on the open, and only about 300 sells. Actually, exactly 290 to be exact. So we're seeing some positive rotation. We're up to 57.66%. I actually think this is quite healthy from the standpoint of how the database is acting in this scenario. I think it's a bit interesting. Yeah, so just making sure the sound looks good. If there's any sound issues, we had some sound issues the other night, just let me know. I just bought a new mixer, so everything should be better next week. Anyway, yeah, so what we're looking at a database, it's pretty normalized, I think, as we look at things right now. We're looking at the potential here for the this rotation to kind of continue without getting too far out of sync with, meaning that it goes into 70 or 80% bullish. It's actually really good if we kind of rotate around this 50, 60%. This is actually more normal. And the big thing is this video, so tomorrow after the end of the session, we're going to have a weekly run that comes out, and we'll look at the weekly models. We're at 86% bullish, and these are crazy numbers. And I keep thinking that we're going to get some kind of rotation to come out of this market at some stage, but we're not seeing it. And with the rotation we're seeing in the daily database, like I said, it's fairly bullish here from the standpoint of how the configuration and what's going on within the database. So I'll probably go into some depth on this in the Substack newsletter tonight. I'll be talking about that as well. So it's going to be somewhat redundant, but we'll also have some time where I'll be able to see some of the action between now and when I write this. Yeah, we'll go through gold as well. We got to give some homage to Peter Schiff, right? So anyway, that's one of the, certainly a KR report meme for sure. So let's go, but as far as everything goes here, this looks like what's likely to happen here is, as we're just going to see this database continue on, and certainly after a day like today, we're not going to see any negative rotation. We'll probably be back in maybe a 60, 62% handle. And I would like, actually, just final comments on the database. I'd like to see it not get too frothy here and do what I was just talking about, where we get a rotation and everything sets up that way. So let's go ahead, and we're just going to go old school Kendall Report. Let's go into the S&P. All right, this is always fun. So it looks like I've got the nearest futures up here. It looks like we rolled over to June contract. So that always jacks some things up for sure when this happens. So one of the targets, this is interesting, we'll take it for what at face value here, but one of the Fibonacci targets I was talking about was, we'll look over here, was 52.24, right? Well, we roll over to the contract, it's 52.24 on the rollover. So I guess we satisfied that. We're seeing the algorithms actually, let me just make sure we've got some, okay, yeah, it's really starting to look like an EKG back and forth, right? So it's not really there. So I think we could actually look at the individual contract. Yeah, I'm just looking at the timeline. Somebody's saying hit the B adjust button. I'm not sure how to do that, so I wish I was more fluent. That's okay. What's happening here is that turnover is actually causing, that rollover is actually causing PPMs to react to it, and everything's looking fairly bullish, and we're back into trend mode. Let me just do one thing here. I think there's a way to, let me see what I get here. Same thing. Let me try one more thing. I know there's a way to pull up the individual contract. Not getting there yet. Bear with me. Yeah, I'm not. I don't know this platform well enough. What I think we'll do here is I'm just going to bring this up over here. All right. I'm going to. So here's what. We'll take a look at it here. It'll be a little easier. We don't have the algos here, but we can see that basically the PPM's flattened out with tonight's action. This does not have the same rollover, so we're 51.81 unchanged here right now. 61, I take that back. So yeah, we're just looking at that number kind of coming up, and we're staying within this box. So even though this is, see, there's the Fibonacci targets up above here. This is TradeStation I brought up. So this is Fibonacci trades there. So let me just get off here and get back over here. Yeah, make sure that you recognize this. So let's go. This is kind of really blowing up the presentation, what I wanted to bring in, because we're looking at, even with the rollover on the weekly charts here now, we're up at the upper Fibonacci. Today we were printing R1 on the weekly, before the rollover, 51.76. I don't know why they roll that contract like they do. They do it obviously on even the first Thursday, or there's some kind of volume number that's kicking that over. So all right, I'm going to try what somebody just said. Yeah, sorry, I've been using TradeStation for 30 some odd years. And somebody's saying there's an arrow. Yeah, I'm not figuring it out, folks. It's not helping. I'm sorry. I'm just all thumbs on this thing. This is not my primary tool. I mostly use it just here for the presentations. Yeah, anyway, you guys get where we're at. So pre-rollover, 51.76 is the number that you want to look at. And but you can still see that angle of attack, that slope, everything that was there. That's pretty important on from the standpoint of what the configuration's doing, right? So let's go, even though we got this number in here, even the monthly is starting to get frothy with the rollover, but there is, I'm not sure I mentioned this the other night, but we are seeing some big numbers. 52.36 is R2, which is a nothing with the rollover, but really the numbers to watch are 53.07, 53.70. And I saw some some guy looked at a headline the other day and was telling me that for the last 2 years I've been calling for the market to go down, and he would have the wrong guy. We're still, as I mentioned, just looking at database, we're still looking at forward-looking expectations for June, July, probably more July, and possibility of October as we go forward. Okay. All right. Well, we got NASDAQ to do, so maybe I'll figure it out there. So let's go ahead and take a look at the NASDAQ. All right, folks. I have obviously don't know where this is at, so we're going to have the same rollover issue here on the NASDAQ. But you can see we're printing up. I mentioned this the other day. The angle of attack is really strong, even though we're seeing the dissipation of the upward momentum. Even if we look back a ways on this chart, what we see is the momentum is still going to be in the 1.7, even if the decline all the way into, this is monthly, looking into September, we're still going to be, this angle of attack is going to be very positive. So that 10-month moving average is probably going to be any extreme. If we do see, somebody was talking about the other day, maybe we get a 5% correction, that's definitely probably the one you're going to buy. Yeah, so it's not, so this is important, FF. You're saying they don't look good. They actually are doing exactly what they should do. And I'm going to draw something in, and I know you've been around the channel for a while, but let me draw something here real quick, because this is that what I call the trend maintenance mode, where we get the indicator to come out, and then ultimately it just goes flat. Let me clear all this stuff out. So this is the pattern here. As you get this up, it comes down, and then you just go flat. And all of these indicators, this is when you're looking at long-term charts, this is what you end up getting, is these type of patterns, especially on PPM1 and PPM2. And these are just positive integers, especially when you get into a 1+ integer on this. They're, even though they're looking down, doesn't mean the market's going down. It means that the slope that you're seeing here on this moving average, you can see as it starts to go, let me clear this out real quick so you can see this. As you can see, as this moving average starts to top out, all you're seeing is that angle of attack is flattening out. And even when we get way over here, it's still positive, even though it's went through first and second derivative. At some stage, the market just kind of moves up. I know this kind of scrabble here, but it's going to follow this trend line, which is the 10-month moving average. That's going to be your big time number to watch as you go through that. If we see the value of the 10-period moving average anytime in the next 6 months, that is the ultimate dip that you're going to want to buy for sure on that. So from this standpoint, this is a NASDAQ. So let's back up to some reality. You can see the angle of attack here, same kind of deal. You see the increase, what I call the setting of the momentum. It usually peaks out about halfway through the trend. Then you get into this literally flat line. That's what's being projected. My guess is we probably stay more up into this 1+ handle on the PPM. So this is very, very positive, and these angle of attack are really, really strong from the standpoint of what's going on here. So on the daily, we'll just see the same kind of situation there, where you're getting kind of into a maintenance mode. We should climb. We got down just the other day. It's pretty amazing. We printed down into the lows here, and then it just snapped right back up. So very interesting configuration here, folks, from the standpoint of what's going on in the trends. So let me just come up just for a minute here. So as unfortunately this rollover happened tonight. So anyway, I think what we're looking at here in all these indexes, we're printing all-time new highs. It's just kind of like a perpetual machine, is this sentiment that's around the markets right now. I think even the bears that I think last week got squeezed pretty hard, I think even they realized that they got it wrong. So now we're kind of getting the stampede to come in, and it's like almost like a swarm, like a cloud that's coming at the markets in a good way, where all of these new buyers are continuing to come into the process here, and everybody's scrambling, trying to get their hands on something. And it's pretty phenomenal. I've been in these kind of big rallies before, and one of the hardest things to learn is they always go a lot further than you think. If you use stochastics or RSI and those kind of what I call 0 to 100 meters, they just finally just get pinned up at the top, and they're over, so-called air quotes, overbought, and they just stay there and the market keeps going. And that is always the treacherous mode for a lot of folks, because they start going, well, it's overbought, I'm going to come in there, I'm going to take the other side, do a contra trend, and it's just, that trade isn't there right now. And with us screaming into new highs, this I mentioned in yesterday's video, I believe, if you go to WaveTech right now, and and when you go to the research in the corner, it's probably telling us just that. Matter of fact, we can actually do that. Let me see if I can find that right now. So let's just put SPY in here, and we'll leave it on weekly. And what you'll see here, what I want you to see is, okay, so this is still, let's go daily. I just want to see what it looks like on daily. What I was hoping to see is a message here that, yeah, so it's interesting from right now. This is even more interesting, is that it's not in this oversold vertical mode that we'd expect it to be in. So that's actually interesting. I'm glad I jumped over there to that, because really what we're seeing is normal markets, believe it or not. It seems like it should be abnormal, but the database is actually suggesting that as well, from the standpoint that, we're at 58% bullish on the short term. It's not frothy. It's not in the high 70s or low 80s or higher. So we're not seeing these excesses of the markets doing the things that we normally do. So, yeah, very, very interesting place we're at right now. Let's go ahead and take a look at the Russell. Okay, so like I said, Russell is continuing to be at least strong, but we're not. It's been the laggard all year. This is the daily. If we go to the weekly, it looks a little bit better, but when we look at the chart, we're a long ways from a new high. I have discussed these weekly Fibonacci targets up here that are valid right now. We're looking at the moment. Let me just find them here. There they are. 2363, 25, 38, and 2646. So that is the upward targets. That would put us possibly over here. Let's go. I'm going to flop over to monthly. If we look at monthly, I mean, we got to get well above. Here's the high right here. Let me get that number. This is the big reversal high back in 21, and this was 2460. So we're still 400 points. That's a long ways on this index to get all the way up. And so yeah, so this pattern on the monthly is really just, we're finally breaking out of that upward range, but it's a long ways from doing anything exciting, but good metrics across the board from the standpoint of what we're seeing action-wise. PPMs are in that trend maintenance mode on this as well. So this little slight uptrend compared to when we're looking at the NASDAQ and all that. So I'm just going to continue down the trail here, folks, and we're going to go to the 10-year. And I think this is fairly interesting. One of the things I've been talking about, and this is where we'll talk a little bit more about my concerns as far as things go and the yield curve and things of that sort. Thanks, Jeffrey. I appreciate that. So we're seeing toward the end here of the week, we've already printed down to the extreme 4.03. We printed 4.05. STX on the 10-year on a weekly basis is at that level. We have two Fibonacci targets here, and I believe we're probably going to retest the lows over here that we made in December, which is 375. And here's my concern. That if we do continue to see yields drop as they're being forecasted right now, then what's likely to happen is this yield curve's getting way out of whack. So it could, I'm going to put a, if you can't see me, but air quotes on this, it could trigger an action at this next meeting in little less than, I think it's about 10 days off or so. I think it's on the 12th or the 14th, I think is the FOMC meeting. We could, depending on what happens, if these things are printing 390-ish, 395, and I'm sitting in the FOMC meeting, I'm a little concerned about having a federal funds rate of 533. I think that's a bit of a concern from my viewpoint. And it actually, for the first time, I'm seeing some things where I've been pretty much a fanboy of the Fed. They've actually done a really good job, but they're so locked in now. I mean, even Powell was kind of him-hawing around. I watched a little bit of it. It's really hard to watch these hearings in Congress because every one of these congressmen are showing up and basically grandstanding whatever issue it is they want to get to try to manipulate Powell. Give him a thumbs up for doing a good job at not buying into the crud that these guys are throwing out there. But my concern is that if they may be holding things too long now, that front end does not need to be at that level. I think even if they brought it down, I've been mentioning 50 bips, maybe down to 75, getting that front end, that would put it down around 4 3/4. And I think that's a much more realistic rate. And I've been talking about this for months, okay? And I'm just going to keep talking about what I'm expecting a slight inversion, but basically almost a flat yield curve. And then once we get to that level, then we're going to see if this fantastic productivity starts to show up. We had productivity report today, basically came in at 3.1. Like I've been arguing, as I think those numbers start to come in 25, not this year. I think as we come in first quarter of next year, we're going to see a lot of gains based on AI and productivity starting to increase at some crazy levels. So I am, for anybody that thinks I'm a super bear, I'm not. I realize a lot of folks might think that you might need, I saw a comment that somebody said need a 10% correction in here. No, we don't. Actually, I don't see it based on our database where we are. We'd have to rotate the intermediate database back under 42%, I think, to get to that. And it would take a fair amount of action to start to roll this over. So let's put a scenario together. Let's just do this right now while we're talking about interest rates. Is that if we saw rates come down and the Fed doesn't start to do some things, then we're going to start to see some weakness start to come in the equity markets as well. And I don't think I'll go there tonight, but it is related to the interest rates that we're talking about right now. As I think it was last week, I was talking about the yen, the Dow yen, getting over 151, 152. They saved it somehow. We're back, I think, 148, maybe 147 Dow yen, so it backed off. But that could have triggered a lot of selling. That could have driven the treasuries down, and we would have saw higher yields. What we're seeing right now is a pretty steady rally coming in bonds, and I think we probably see Now 395, 390, and the potential of going all the way back to this 375 level. That's not tomorrow. I don't think that's happening. But what I do believe is that we're going to see that start to become more realistic as we go down the trail just a little bit. So from that standpoint, I have another machine logged in. Sorry, it's been kind of an interesting day with the rollover and everything. But the scenario that looks likely is lower back end. Fed's probably going to drop rates. I know I mentioned this last night in Substack. I know I've been the guy telling you they're not going to drop rates. And when I was talking about that, I think really what I'm referencing is the back end. They're not going to influence the back end where it's going to start to pull the whole yield curve down. They're going to keep that front end a little bit of a bid or a little premium to the other maturities. I think that will stay like that. Like I said, 475 flat. You start to get into 510 and 30 part of the yield curve. Then that's all going to be hovering between 390, 410. Depending on the maturity. And so I think that's how this thing continues to look. I just do not see it going any other way. And like I said, I'll say it again, I know I sunk my putt a couple of times, but what I'm looking at is if they don't do something by June, for sure at that meeting, then I think we're getting a little risky that they're getting to the point where they're going to overdo it. I saw some senator today say, why don't you just lower the rates now? Why do you have to see pain in the markets and all that? And Powell and the boys have gotten so used to, boys and girls have gotten so used to getting the strong labor market that won't go away. It just kind of got their back, and they're just feeling very confident. So that may start to go. Like I said, continuing claims bumped back over 9 million. So I'm just looking at that number getting bigger from that standpoint. All right, so let's move on. Okay, let's go ahead from here, and I have not covered crude oil. Let's see how am I doing on time. Pretty good. I'm getting a little long in the tooth, but let's just touch on crude because I have not covered that for a while. All right, so looking at crude here, there's really just been a consolidation. We still have some Fibonacci targets up above. I always acknowledge these because every time I think they're not going to get hit, they do. And so we're looking at the upward Fibonacci still at 98, 106. I think there would have to be something really very disruptive to happen to make that go on. We do have a slight upslope in the trend, so there's a slight movement to the upside. There, these red dots in here, I'm going to try to blow this up so you can see this a bit. Those of you that have the indicators, when you see these red dots, these are pivot numbers, and there's a pivot right here at 81.67. That should represent the ceiling, but if it breaks through that, then all of a sudden these upward Fibonacci's at 98, what have you, start to look pretty good from that standpoint. So that's something to keep an eye on. At the moment, doesn't look like much, but there is a slight upslope, and most likely the range that we're going to remain in is like 75. I'm rounding numbers, 75 to maybe 82, 85 tops. If we get above that number, then there's something much, much bigger from the standpoint of what's likely to happen here. All right, we have not covered gold. If you're new to the channel, I always make jokes when I go to gold about Peter Schiff, but he's got to be just ecstatic right now, right? this thing finally breaking out. We're printing up at some pretty crazy numbers, 2172. I covered this the other night in the long term, but if we go out to monthly all of a sudden, and I bring in so we can see these objectives, there's 3 fib targets on this thing right now, looking at 2290, 2470, and 2580. That's these 3 green dots that are up here where my cursor is. And the overall momentum looking forward over the next couple of months looks really good. So, you know, that's a pretty good number to keep track of there from that standpoint. We're sitting here, however, on a month. This is a monthly chart. On a monthly basis for the month of March, we're sitting on the RTX number. That number is right now, you'll see it over on the right-hand side, RTX 2166. So we're actually printing just above that number right now, 67, right at it. And there is still what I would expect, but hey, it's March 7th, right? So we're weeks away from getting an update on market grid that we could continue just to print through here and go from there. That might be something really good, Jeff. I see you throwing up Newmont, and it might be kind of an interesting show to do maybe next week. If you guys will remind me, maybe we'll go into the miners, maybe look into the junior miners and miners, and just see what's playing in on this stuff. And we'll do kind of an interactive session. I think that sounds like that'll be pretty interesting to get into. I'll have to reach out. I've got a client of mine that's really into all the junior miners and is pretty knowledgeable on that. One of my institutional clients. So I'll have to reach out and see if we can do that. But yeah, I'm telling you, folks, I don't want to sound that maybe this is what a top looks like when you start to get really enthusiastic. You feel it. But everything that I'm looking at, everything that is going on here is, yeah, we're extended, we're at all-time new highs, but that just because we're at a new high doesn't mean there's a collapse coming. I'll leave that up to the TikTok analysts to come up with those ideas. But really what we're looking at here from the standpoint of the of all these trends, these are very, very robust trends. And one of the, I think, most difficult things that you have to do as a trader, investor, manager, whatever you are, is looking at things and kind of staying with the trend when it's necessary. Now, I'm the first guy to tell you that you can manage the market. You can definitely time the market. You can do all of that stuff to a reasonable degree and be very successful at it. But there are times where it's very, very difficult, where markets like you see right now, they're just trying to get you to sell, even to take profits, or they're trying to think about NVIDIA and then the vertical move there. And there's plenty of examples like that, right? They just, every time it makes a new high, you just like, you're white knuckling, like, got it, should I sell it? It's overbought. It's very, very difficult to stay within the trend. And some of the numbers that I talk about, and especially with the PPMs, of being able to know what the probabilities are on a 10-week moving average and something just to get through it. And one of the things that Jeff's talking about here is just writing, if it's a stock, writing some calls, or even you can do that against futures as well, as if you're trying to hold these positions, you just write some out of the money calls against this stuff, and so you can get some longevity. And actually, if they're deep enough out of the money, you're hoping you're hoping you get called away. Those are good things too when those things happen. But the point is that these are markets that are very, very profitable, especially when you're operating into new highs. It's very, very difficult to have the discipline. And it really, discipline, by the way, comes from belief systems. And if you don't have a good solid belief in what you're doing, you're going to make all the mistakes. You're going to get out early. You could go and quote J.P. Morgan, and that was his favorite line. I always got out too early. It's okay to do that as long as you're justifying things based on some metrics that you follow, that you have already validated. And this is one of the things that I talk all the time about when I'm talking to traders and how to actually trade, is you want to make sure that whatever metrics you're applying to this, that you have the experience of knowing that this is got a way better than even probability of it mapping out and working. So, just make sure you have those things, because that, for me, is one of the hardest things to do. And trust me, I get out early and all the time. That's okay. Especially on day trading. I had a trade on this morning that should have stayed on, and I just grabbed it, and that's just the way it goes sometimes. It just happens. Still happy, had a great day today, so I'm not worried about that. But you just have to, and I did have a metric that wanted me to get out of that trade, but you just do it, and if you believe in what you're doing and you structure your trades, everybody knows, have some kind of systematic approach, and plan your trades and trade your plans, right? That whole adage. But anyway, that's a lot harder to do than it is to say. So let's go ahead and let's go into Bitcoin, and we'll finish it off for today. Hang with me 1 second. Just have a little issue on the other side. All right. Yeah, so I'll leave this up here because this is the monthly. I mentioned earlier, let me crank this down just a little bit. We have 3 Fibonacci targets, and I mentioned these going back into March of last year. This is why I always mention these targets, is they were for a move. Let me bring them up here. 55,800, I'm rounding off, 71,300, and then we've got 80,846. And it's interesting because I'm going to bring this down a little bit. This goes back in 21, and I remember talking about these upward projections we did not hit. We came short. This is when we printed the 69,000 level, but if we look at the Fib targets then, it was 89,000. I remember mentioning these numbers, 112 and 127, these old objectives here. So I'm going to do something we did the other night. We're going to go into basically almost a ridiculous metric, but hang on 1 second here. We're going to go into like the quarterly chart, right? So this takes us back to the beginning days of Bitcoin, but it's sort of interesting. Like I said, we're printed, the high was 69,000. This month high, 69,200. The Fib targets on the upside are interesting because we've got an 81 print, 81,350. I'm rounding numbers out. 106, 522, and 122,000. That's the, and if you start to look at a swing trade kind of possibility, that's what these are projecting. This, the WaveTech Fibonacci tool has pattern recognition. Let me just see if I can put something on here. Yeah, so you'll see it's picking up the pattern over here, this green button, the red button, and then this green button. It's projecting a swing, and the swing it's projecting is waves 1, 2, and 3, or a big ABC. They have similar metrics from an Elliott standpoint, And what you're looking at here is that they are they are projecting that waves 1 and 3 will be equal, right? And then they Fibonacci projection of 1.382 times the length of 1, and then 1.618. And these setups happen intraday, 5-minute charts, 1-minute charts, all of these things. But I just put it up so we could mark these levels here and take a look at this. I think I can see if I can throw on another script real quick here, if I can find it efficiently, and then we can take a look at that. Just trying to find it. Right here. Yeah, so now let's see if I can blow this up a little bit. Let me get off screen. You can see the projections, but you can see the blue lines. It's showing you where it's marking these lows. It's right where those pivots are. So then the projection on the upside here is a huge number, which is right here. So you can see the blue line. I'm just going to draw arrows around it. Here it is here. And then this projection here is 1 and 3 equal, 1.382 and 1.618. So like I said, I go through these numbers because they seem absolutely ridiculous for any possibility that this is real. But every time I don't show them, guess what? It goes right to that. And so I thought that was an interesting metric that I found earlier when I was doing some research. So yeah, so you can see it there. If we scale it back, we do monthly, you can see pivots there as well. But this is where these pivots are coming from. So this is the swing projection over here. We've already hit almost satisfied Fibonacci target 2. And then if we come down, this is monthly. Now we come to weekly. So we have 3 weekly Fib targets going back to February, early February, a few weeks ago, if I can get this thing to stay. Yeah, February 19th. We had 3 Fib targets there at 60, 62, 63, 71, 850, and 77, 544. So we printed 69.2. We're pretty close to satisfying this 71 number. So everything just continues. And I've been talking about this both in the Substack, because I cover all these markets every night in the Substack newsletter. And even once again, just like with the PPMs, folks, even though these are fading here, that's not a negative pattern. I'm looking, you can put your cursor on the line. Even if I look at the worst projection, it finally gets negative out in May here. This is a weekly. But what will happen during this time, my guess is we'll see a moderation of these drastic predictions on the downside. All that's going to have to happen is Bitcoin ends up going sideways, maybe consolidate, prints a new high of some sort, and then that's most likely what will happen from there. Take a real quick at the daily. Must go all the way down. Daily still trying to lose momentum. We got this big volatility day a few days ago. So I went into talking. I believe the other night I talked about these what I call volatility explosions. It's just like with Bollinger Bands. You get that with that big bubble thing that forms on Bollinger Bands. This is a little different, but it's a volatility explosion. And it's daily range or weekly range, whatever. In this case, it was daily. We get that explosion. We get that big bar. We traded down just below the 10, but at that bar, these 2 bars, on the 4th and the 5th, just this volatility just blew it up. And this is where this volatility came in. So as I mentioned in last night, I believe I was talking about this, is what I was talking about is when you get that expansion of the volatility. Matter of fact, let me just come up full screen. We'll end this show right on this note here. Yeah, so what we get when we see those big volatility explosions is volatility normally has to contract a little bit before the next move will be signaled, and it's pretty typical once we get that. In the case of, like, I could bring up a whole lot of charts. Tesla always comes to mind. If we go back almost 2 years when the Tesla high was being printed, we got the big bubble, and we also got a big RTX sell signal, I think, on the monthly, and it's never seen that print since. And it's just still consolidating, still trying to get some kind of normalization there after a long time, especially when you get into these longer term trends. So from the standpoint of what's going on here, if you have the indicators, when you see those bubbles, they could happen on a 5-minute chart, any duration of any chart, any type of sequence you can go on, 1 minute, 5 minute, even on those of you know, a lot of times intraday, I will use a 5-second chart to try to fine-tune entries and exits, and even the 5-second charts get these blow-ups, and sometimes you can call them a rug pull, or I call them like a dump. Like you'll see, especially trading E-mini futures, all of a sudden you'll see even a big surge on the upside or a dump down. Those are typically climactic moves. I'm always trying to, when I see that, I'm trying to run in there and try to take the other side of that just for a quick scalp. But those things happen all the time, but they also start to set up when you look in hindsight at these patterns. What you'll see is those events end up to be climactic periods, and the markets will start to move in the opposite direction for, depending on the market that you're trading, the length of the chart, depending on what type of time series you're applying. You're going to get those kind of events where it's going to be 5 bars, 10 bars. There's some characteristics that you'll see depending on the market you're trading, whether it's a stock or index or whatever. So, just be careful with one of those. I saw a TikTok video, I think yesterday, of some guy dropping 50K trading some E-minis, and he was doing everything wrong, obviously. I mean, he was buying for a surge in the top, and it was reversing, it's going down, and then he was convinced it was going lower, and he got short at the lows. Oh man, if that guy just had the webs, the WaveTech webs, I could have shown him how to not do that next time. It would have been pretty obvious. You just have to watch out for volatility spikes and emotion and all that. And hopefully you folks are having a good time out there. Once again, I want to thank all the new subscribers. I'm really grateful. I'm hoping that this new format and what we're going to do going forward is going to get us up 50, 100K on subs. So make sure you like this video, share it, subscribe. Okay? Thanks a lot, everyone, for watching. I hope this was a good show. Sorry for the rollover. I kind of walked in that one. I didn't see that chart. It didn't show up until the market opened right when we started the video. I would have been ahead of that curve. Anyway, have a great weekend. And I'll probably see you on Monday afternoon, but watch Twitter, and I'll do some kind of post on YouTube as far as what the schedule is going to look like next week, so you'll know what to expect. I do have a video, another video that I'll probably post this weekend, so I'll have some kind of content no matter what. Anyway, have a great day, everyone, the rest of your day, and also have a good day trading on Friday. Should be an interesting one. subscribers. We're at 35,905. So we're close. Talk to you soon. Have a great weekend. Nice to see all the moderators back and the Smurfs. Good to see that purple. Have a great weekend. Hey Jeff, if you can hear me, we actually are working on a pretty big project bringing API and database and stuff into GPT. And yes, I've done quite a bit of research with it, so I will definitely, you guys will know as soon as I get some action going there. Thanks again for watching.